There are always these unicorns in each bear market that remain in a bull market, sort of. If you remember, in the past cycle, we had stuff like Link that was going up while everything was either going down or sideways. So it's always good for to look for those.
Great. So, in terms of trading a particular crypto or particular token within the bear market, is there any particular cryptos that you think are better to be trading rather than perhaps some others? Is there ones that you might be avoiding during bear markets? What would you suggest?
Yeah, for sure. There are always these unicorns in each bear market that remain in a bull market, sort of. If you remember, in the past cycle, we had stuff like Link that was going up while everything was either going down or sideways. So it's always good for to look for those.
Mm-hmm.
And if everything's and if the rest is going down, then I suppose it's good to avoid the low volatile coins, because there can always be a big slippage and so on. So it's and usually in a bear market, a lot of people exit the markets in general, so a lot of capital is leaving the markets, and generally the volatility goes down and the percentage of, well, yeah, and yeah, basically you want to look for markets with decent volatility so that you don't get some crazy slippage. But lately, with the CPI numbers that we received from the Fed, we've seen even slippage on Bitcoin, so even that can be tricky sometimes.
Mm-hmm. So the sort of the challenge for part one is if you're trading with extreme fear. Obviously, everyone understands where the fears come from in the market.
Yeah.
How are you going to place a trade, and can you place a trade for us to demonstrate how you might place a trade, choosing the crypto that you want to trade under those rules that you've just given, as well as that taking us through kind of your system behind how you trade.
Sure thing. So the general advice for most people would be to trade with large. Obviously, always need some sort of invalidation,
Mm-hmm.
and or stop loss, which is not necessarily the same, because you can have invalidation for, like, if you look at the Bitcoin chart right now, you can say my invalidation is, let's say, if we close the daily candle below here and then I close manually, or you just have stop loss at some level that automatically kills your trade. But whatever it is, it's good to have it wide. Don't. That's definitely one of the advices I would give, is to, like, for the general public. Obviously, some traders on lower time frame can use tight stop losses, but don't be trading with tight stop losses, especially if you don't have so much experience. Always use larger ones. So, because then there is a lesser chance that you will get stopped out and then market runs, whatever the direction is. And if I could place a bet, actually, it's funny because we are in this sort of descending triangle that everyone is seeing right now, and we are getting to the point of of the break in either direction soon. And obviously, trading it right now is risky. So, and we have the FOMC tomorrow, which is
Mm-hmm.
which is gonna cause a lot of volatility, in my opinion. So if you could choose two sides, then obviously you wanna have your invalidation really wide, and then you would look, if we are breaking down here, we are looking for this area, right? So basically, this is your trade if you wanna bet short, and if you wanna bet long, then basically you wanna place the same and have invalidation below here, and it can be either manual or automatic, like with a stop loss. So it can be placed either below this low, which we created yesterday, which was a very decent buyback, or you place it under this one. But again, there's a chance you're gonna get wig hunted and then it runs. So it's always sort of risky.
So how do you counter your risk once you're moving through? Do you have so for example, like a consistent 3-to-1 risk to reward? When it gets to a certain level into profit, do you move to break even with your stop loss, anything like that, or do you sort of set it, forget it?
For sure, I do have that. It depends on the situation and the type of trade always, and the market structure. So, for example, let's say let's say I would be short here, and market would break down. Then, if we were somewhere around here, right? Or I think if we would have broken this low, and I would be short, then I would move my stop loss probably to break even. And if I was long and then we would have broken this high, then I would move my stop loss to break even. Okay, so for example, that, yeah.
So could you, sorry, you've stopped sharing your screen. Could you share your screen again and show us, so you've taken that trade already?
I have not, yeah. Oh, you want me to place the trade, right now?
Yes, exactly. When you're placing it, all the checks you're doing to ensure that you're not making...
All right, I can do that. So basically, I am now calculating the risk to reward, obviously. I'm deciding my invalidation, and then I'm deciding my risk management on the trade. So basically what I'm willing to lose. Always good to know. Like a lot of people, when they place a trade, they are placing it with the idea that it's gonna work, and they are thinking like, oh, I'm gonna make this much money. And sometimes they go a little bit too much with the risk. So my assumption or my advice would be to switch it and think, am I willing to lose this one? Because before you place each trade, you should be thinking like, you should be thinking, am I okay with this going to my stop loss, to my invalidation, and am I willing to lose it? Because I am most likely losing it on this trade. And if the answer is yes, then you have probably used the right risk management. And then if the market rewards you and goes to your take profit, then all good. But especially this is something that I see a lot of people struggling with, that they basically don't look so much like, yeah, I'm gonna lose. Like they're thinking like, yeah, I could lose, but I'm gonna win, And they place the trade using high leverage, and they're thinking, I'm gonna make this trade, I'm gonna make this much money, and then they are not really like taking into account that they can also lose this money. So switching this approach can be a lot beneficial.